The markets have been absolutely wild this week, especially following the huge Jackson Hole announcement on Friday. Riz and I are going to unpack it right now. Good evening, my fellow Riz Elite members and all of our subscribers on YouTube. Welcome to your weekly market recap webinar. My name is Chris. I'm with Riz International, and I'm joined tonight by the man himself, Rizwan Memon. How are you doing this evening?
I'm doing good, Chris.
Awesome. That is wonderful to hear. We are so glad to have you back on the show. Man, it has been an absolutely wild couple of weeks since we had you on last. We had this beautiful run up to the 200 moving average, and we were cautioning everybody, if you were an elite, you got this information. We were cautioning everyone, be careful because, there's a lot of downward pressure still on the market, and down we came. And then the announcement on Friday from the Fed, that did quite the number on the market, to say the least. Down 3.37% in one day. That was a huge sell-off. Riz, what do you make of all this?
Yeah, wow. So where do I start? Jackson Hole. Jackson Hole meeting, in fact, Jazz said, he mentioned in his update in the market news channel, Jackson Hole's coming. He did that update. It was a fantastic update um, on the actual events to come for this week. That was fantastic. He actually said it. And then, of course, Paul and myself, we touched on it throughout the week that this is coming. Be aware. There's a reason why I'm not trading much. I know everyone wants to trade. I know we have new members. I know they're looking to have trades and more action and blah, blah, blah. But um, we don't do that. Simply put, we don't do that. We don't simply just trade for the hell of it. Um, and that I stand by no matter what. I'm not trying to uh, run a circus. I'm not trying to, have the most. I'm not trying to have a Marvel movie with the most amount of action and insanity on screen. That's not my gig. Um, we're here to be strategic. We're here to do the right thing at the right time as best as possible, right? And that's why I said, look, be careful. We're not going too much longs. We're not doing too much. We didn't even do many Raptor method trades, like the short puts, because volatility was low. The market was just grinding, and you could tell, especially when it got overbought with the RSI. And the last time I was on the 13th, Chris, of August, um, and I was saying, like you said, look, it's getting up there. I still remember it like it was yesterday. I cautioned people. I said, it's overbought. Doesn't mean the market's going to pull back just because of that, but that's a gauge. And I knew, I'm like, you know what? 4,300 is that kind of area where I'm like, holy crap, this could be like one or two things are going to happen. Either we're going to get a massive hard rejection. It's going to pewter out, or what's going to happen is this could be the start of something bigger. And what do I mean by that? I mean, we could see the market uh, essentially moving past the kind of recessionary, high inflation type of environment, kind of akin to how the market in 2020 during March, April, it kind of moved past that whole COVID crash. It moved past that, and we know that the market is forward looking. There's no hard timeline on that, but we do know the market looks forward. It's a leading indicator for the market, the economy. So many people think, well, how can the market be rallying? Especially in July onwards. And to that, I said, well, it's rallying because of sentiment. It's rallying because of some of the data that came in. I felt it being a bit too overly optimistic, um, and of course, based on Friday, I was right. But doesn't mean that we're going back to 3,700. There's people out there calling for a market to go to like 3,000 or 2,500. A lot of fear mongering, because in this day and age, people want extremes, right? Either extreme one side or the other, whether it's politics or whether it's social media or markets. They just want extreme. There's some people calling for like 6,000 on the index level too. I've seen both. So I err on the side of reality around probabilities. So for me, I can tell you Friday was not unexpected. I had some hedges going into it, and I said that I had some futures shorts, and those did well. Maybe some people had some puts, or maybe they had some short exposure via other ETFs. So hopefully those are doing well for people. I'm kind of waiting for tomorrow futures open to see how things go, and then Monday will be very important to kind of get a brief idea if the market still is in that sell everything in kind of feel like it was on Friday, or maybe it finds that okay, we maybe got a little bit of an overreaction on the downside on Friday. Maybe it finds a little bit of a, a floor there at the 4,000 level. But the 4,000 level is definitely key. So if there's one level you guys got to put down in your memory, on your phones, on your charts, on your computer, whatever, it's the 4,000 mark. Okay. I actually said on Friday, I said keep an eye on 4,100. Sharp break below could be 4,000 next. That's what I said in the morning. And then we got, maybe a couple hours later, it broke below 4,100 very strongly. And we settled around 4,050. So it's pretty extraordinary. I did not expect this kind of drop in one day. I don't think anyone did. And for those people that had puts and they carried through the afternoon session, congrats to them. That's great, worked out. But for me, I didn't expect it to go that big of a move, 3.3, 3.4%, as you said, Chris. So I do think there's more downside. We know, and what I've been saying is the market would anticipating the Fed to pivot. Effectively, what that means is to essentially start decreasing, not rates, but decreasing the acceleration, right? De-accelerate the level of rate hikes. So what I mean by that is instead of having a 75 basis point hike, next month in September and whenever the next meeting is after that, maybe to do 50 basis points. And the market was anticipating that until Jackson Hole, when Fed Chair Jerome Powell had an 8-minute brief talk, and it resulted in this, right? It was wild. It was wild. We were watching markets and talking about it in Elite live. So that was wild to see that. It pulled back at 1% immediately, then it recovered and went green, and then all hell broke loose. So this week will be very important. We'll be starting, midweek we'll be starting the new month, September. I feel like the next area is 4,000. I'm not saying it's going to happen on Monday. I'm not saying it's going to happen on Tuesday. But I think based on the Friday sell-off, we do have more downside. I was prepared. I have about 45% cash. I've been saying it for the last 2 weeks to guys, take some gains. And I know that some people, whether it's in Elite, but especially on people on social media, were like, Riz, like we had this massive rally. Like, why are you're selling now? Like, you're getting rid of some of your, holdings. I'm like, yeah, markets could go higher. I can't tell the future, but I am happy taking gains. I'm not cutting losers, especially on solid companies, but I am taking gains. And I'm okay with that. I'm okay with that. It's all about, your personal risk management. And for me, I'm okay missing out on a little bit further of a rally because for me, probabilities speak volumes. And of course, so does being patient. Patience pays. So, in a nutshell, this isn't surprising to me. Congrats to those of you that were in Elite, have been in Elite, to be able to capitalize on this. You must be feeling really good because I know there were some people in Elite as this market rally happened. They were like, Riz, I sold, when the SPX was around 4,100. Now SPX at 4,300. I could have made more. And I'm like, that's okay. You made money. You can't tell the future. Don't assume that the market's going to keep going up and get FOMO. Don't chase this rally. And here we are. Right, here we are. This is where experience counts. It's not just lines on the chart. It's experience. It's priced action. It's everything in one. So congrats to the Elite members and, of course, our new members as well. I hope you'll be able to stick around and get a continued amount of value in Elite.
As I'm fond of saying, especially for all of our new members who may not have heard my repeated mannerisms, it's like no one ever lost money by taking profits. And this is a great explanation of why it's important to sometimes just lock it in. And if the move continues, oh well. As long as you get the meat of the move, you're going to be just fine, and you'll avoid bag holding through, a 3.37% drop in the S&P 500. So really great advice there, and I want everybody to just take that in for a minute and think about it because we don't know the future. It's easy to look back and say, oh, well, I shouldn't have cut it, I shouldn't have sold here, but you don't know, so just make sure that you're locking those profits in, especially in a market like it is right now, like Riz is advising. Let's take a look here at the breakdown of the S&P 500. Not too surprising that everything kind of rolled over on Friday. I'm sure you all are not surprised by that. With the big drop in the S&P 500, everything went down for the most part. But energy continues to roll, having a nice big rebound here after the July lows, really pushing up nicely, trying to push back towards that high that we had earlier in June. But utilities above the zero line, which is nice to see, but everything else right now is under the zero line. Now, healthcare is overperforming the market in general because the SPY ETF, or the S&P 500, is down 15% on the year. Financials basically on par with the S&P 500, and real estate and tech are slightly underperforming the market at this time. Riz, what are your thoughts here on this breakdown? I feel like this has kind of been our story for the most of the year at this point.
Yeah, you nailed it. We went over in the previous chart. Yeah, pretty much everything's rolling over. That tells you this was like a, Friday was a sell everything kind of day. A very risk-off environment. It remains to be seen if that continues, but it was a very risk-off environment on Friday, and that could be seen from a couple hours in especially after the Fed Jackson Hole meeting. So yeah, not much to glean from there. I will say that if we do get a continued sell-off, we can expect everything to go down, but primarily I will say we'll see tech, XLK, and real estate, XLRE, maybe go down higher or more than the index as a whole.
All right, that's good to know. So be careful with those if you want to get in on that sort of a play. Just be careful, be ready. And oil here has having an interesting week. Came back down right to our support level last week here, right around $85 per barrel. Bounced back up, hit the 200 moving average, and has come back down a little bit. And pretty much a non-starter day on Friday. A very nice doji candle there, not doing much of anything. Gold, on the other hand, has been on a bit of a selling spree. We sold back down below the support area here around 1765. Came back up, rejected, and rolled over with the market like we saw on Friday. Now, gold obviously has not really been acting as a hedge against inflation as it used to, but oil here is definitely lower than I think a lot of people expected. But I mean, still, really just kind of hanging out, really not doing too much at the moment. Riz, is there anything that you're looking at either of these two?
Yeah, oil seems to be in a downtrend. Keeping an eye on it. I mentioned 2 weeks ago when I was last on, I said, look, OPEC is a catalyst. If they do decrease supply, believe it or not, they're thinking about decreasing supply, which is not good for people at the pumps. But that's what they're thinking. We don't have a hard answer or conclusion on that yet. But we need to keep an eye on it. I feel like at this price point, around 90 is pretty good level. All things considered, we're now 6 months past the Ukraine-Russia conflict, believe it or not, and it really, I feel like we need to keep an eye on it. I feel like 85 level, if we get to that, I might consider something like a potential long. Again, I'm not setting that in stone, but I do want to see it. Right now, it's still in a downtrend, right? And I'm keeping an eye on it. Gold is a little bit. Nothing new there. We know it's not a hedge. But it's moving down, and that Friday's candle, that last red candle, you can see even gold was sold off, metals were sold off, and that tells you, as I said before, that this is on Friday was a sell everything kind of day. So I feel like if we do see gold around 1680, that initial touch point, and it holds that, maybe, again, no guarantees, maybe I might consider long at that level. So you can note that down. Right. But yeah, I'm not too stoked on metals, golds, yada yada.
Yeah, fair enough. Another thing that's been taking a bit of a hit lately is Bitcoin still has not been able to break out of this sideways channel that it has been in, and it is fighting with 20,000 right now. That has served as pretty solid support for the cryptocurrency, but just can't break out of 25,000 at this point. So really not much going on. Bitcoin pretty much languishing at this point. Really not too much to talk about here, honestly, in my opinion.
Yeah, this is a key level. 20K is a key level. A sharp break below. Again, I said many months ago that below 20K, look out below. I actually had taken a little bit of a position. I mentioned, real time when I did take it, and then I mentioned real time when I did sell it. I sold around 23,000, and I took a long around 20,000. This was a couple months ago.
Yeah.
Um, so for those that have been paying attention, but I'm out. I know a position. And here we are back at the point where I'd taken a long position. So I'm not buying yet though. If I do, again, I'll let people know on social media and of course Elite. Uh, but right now, I'm not surprised. Again, Bitcoin, moving with the market. Big sell-off day on Friday, big sell-off on Friday for Bitcoin. So for all the people saying Bitcoin fixes this, well, no, it doesn't. It just goes along with it.
Absolutely right. And you'd mentioned that we hadn't taken too many positions. One that we did take on Friday, which I thought was a little interesting, is Sanofi, SNY. Went ahead and got in long on this one as a bit of a speculative play. Man, Sanofi getting absolutely, just demolished here post earnings. Looks like they got beat down pretty hard. What's your thought process on this one, Riz?
Yeah, we took this long. Again, nothing, not a large position in this market. Very oversold. I just took it and it kind of pulled back a little bit, maybe a percent or so from our entry. Not too bad. I couldn't anticipate, of course, exactly what would happen with the stock or the market for certainty after Jackson Hole, but it is what it is. It's not too bad. I want to see, and it was holding well. Had some relative strength. It's still holding well, even after giving back the earlier days gain at the open. It gapped up at the open and then it kind of pulled back, as you can see with the red candle, because everything plummeted, everything tanked. So I think this has some good relative strength. This is a great, solid, big pharmaceutical company. Um, has nothing to do with vaccines or anything. For those of you that are critical, um, it's great. So I'm long this. Nothing large. Remember, I'm mostly 45% cash, bunch of hedges, uh, and I'm sitting pretty right now. In fact, I added another. I haven't posted it because I don't want to be fucking, you know, whatever the word is, douchey or whatever. I can't remember the word exactly, but I did add some money to the brokerage account again. I won't say how much because I think at this point it's getting to be a bit chauvinistic, so I don't want to get into that. But I did add some money because I feel like, okay, right on, game on. My plan or my anticipation of where markets could go next was right, and having more capital at my disposal, along with 2 mil plus margin in just one of the accounts, is is a good setup to be not overly exposed to markets while also having enough capital and dry powder to utilize.
No, that's really good advice. And I want to touch on that. I want to give our people here who are live the chance to go ahead and type in your questions now, and we can take a look at whatever you want to take a look at or discuss different things going on in the market. But I wanted to kind of touch on that where you're talking about, adding money to your account. And I think this is really important for especially new traders is, you really want to be able to add to your account whenever you can. And I'm not saying you got to put in, like $1,000 every month or something like that. If you have the ability to, that would be fantastic. But if you have some extra cash lying around that you're not doing anything with, it sometimes is really beneficial to add that to your capital in your account, so you can continue to help compound that account, keep it growing. And really, the best way to do that is to have more, as Riz likes to call it, dry powder available for when that moment comes where you need to pull the trigger on something.
Yeah, I feel like, Chris, people should try and make it as systematic as possible.
Yep.
I always feel like if people think, like, do I have extra cash, what I can do with, they might not do it because they'll find something else to do with. They'll find something else to do with. They'll just maybe consider, buying something else because they see the amount there. It's just honestly all psychology. So unless someone's like me, putting in, $50,000 increments, that's a different story. But for the vast majority of people who you know are obviously have other things to pay for, aren't complete, um, complete, screwballs, and all they want to do is just put money in the market like me, have no life, and just no debts, no life, just keep putting money in the market. I'm not saying that's reasonable. So I'm not, by no means am I saying you got to be like me, but try and systematically have an amount that you want to hit every single month to capitalize and put it. I can assure you, this is how wealth is built. I did it, in my 20s, once I known that, okay, I know what I'm doing. I have the years of experience. I have the track record. I have the performance, and then I keep adding. And I've been sharing what I've been adding this year, as obscene as the amounts may be, and it may come across as cringe or eye roll. I'm not trying to show off, or I'm showing that because, one, it's proof, and two, because I'm sharing that, look, even someone like me, who has a track record, who can do well in markets that are going up or down, I still back myself. I back myself. I bet on myself by putting capital in, because I feel like I can outperform. Maybe it doesn't have to be in the next month or two, but I can outperform over a span of a few years. I can beat markets. I can outperform benchmarks and indexes. So why not bet on myself? Right? You want to look at the same thing. If you're an elite, or if you're not, whatever you want to see. Do you have the community? Do you have the track record? Do you have the backing? Do you have the confidence? Do you have the experience? Do you have the people around you, and the mentor and the guidance to help you, grow your account? Then yeah, absolutely. Start putting in money. I'm not saying put everything in, and you don't have anything left for bills, or groceries or anything. No, I'm saying, based on your situation, do the best you can to really push. I feel like a lot of people don't push themselves. Like, I'll be honest, my wife's like, Riz, I want to get this, I want to get that. I mean, she's not here right now. She'd kill me if she heard this, but she's like, Riz, I want to get this, and this is like a fucking $10,000, $15,000 bag, and I'm like, fuck no. I'm like, I can't afford that, and then I'm putting like 50 grand in the market, right? So, and she doesn't watch these, so I'm safe. But yeah, like, that's the thing, right? That's the thing. I'm like, I don't have fucking money. I'm just, she doesn't know that I'm putting in the fucking market here. But hey, this is what it takes, right? And I'm not saying, like I said, don't don't exactly try and do what I'm doing, but at least you get an idea, right? Like, I don't could give two shits about some fucking um, Chanel limited edition $10,000 bag, but she does, and that's her prerogative. That's fine. But I'm not ready to put that money in something like that. Because how many bags can you wear, right, at one time? It's one. I tell her each time, like, you have 15, 20. If she sold all her stuff, I'm like, honest to God, we could just go to fucking Italy and just, for 1 year, just completely have an entire villa paid for. But yeah, I guess she doesn't want to do that.
Dude,
Then she's
that's
like, "Well,
hilarious.
why don't you?" Yeah, she's like, "Well, why don't you, sell some of your things?" And I'm like, "Well, honey, I don't have anything."
Exactly, exactly. It's all tied up in other locations, sweetheart. All right, so Yas wants us to take a look at XBI. This looks like the Spider Series ETF for biotech. It looked like it was kind of coming up here, but man, it got beat down on Friday, just like everything else for that matter. But yeah, Riz, what are your thoughts on this? Looks like it's having a bit of trouble.
Yeah. Before I do continue, Jazz, sorry, just 1 minute. David in the chat room actually says his wife's collection appreciated 2, 3K in 5 years. I'm not surprised. My wife tells me every single time. She's like, Riz, babe, like, this stuff appreciates, especially if it's, you buy the right thing at the right time. I'm like, yeah, great. Okay, so how about you go and sell it, and then show me a proof of concept. How about you go sell it, and then when I see the capital from proceeds of sale, then I'll believe it. But they don't. They don't want to sell it. They just want another one, and then they're like, oh, this is my last one. Um, but anyways, I digress. I wanted to touch on that before I get onto this. Back on schedule. XBI. I feel like this is very much depends on. I haven't looked into what the actual biotech holdings are in the S&P 500. So obviously, this is the S&P 500 biotech ETF. So these are all large cap constituents in the ETF. So I'm sure they're solid large caps. But biotech, we know, is still a bit. It's not the good old regular pharma, right? It's a bit more risky. It's a bit more technologically based. Hence, I wouldn't be surprised if the market dumps. This will dump a lot more. than regular pharma, which is XLV. Again, everyone can see the 68, 70 area is a nice area. Uh, 65, let's say, is a good area for potential long. Will we see it? God knows. I feel like this will move with markets. I'm not currently looking to take a position personally. I feel like if you have a thesis for this, like you like the constituents, you like the companies that are in this ETF, then sure. But I feel like if you like a couple, predominantly like a couple that are part of this ETF as a part of the S&P 500, maybe individually check out the chart for them and then see if you want to buy them specifically. Right? Something to consider. But yes, you're right. 60 area is good support.
Yeah, absolutely. And we have 2018 lows. I'd have to dig back. But yeah, I like that idea about digging into it a little more and looking at the individual companies that comprise this ETF. That could be definitely another way to look at it and see if you would like to get into that. All right, Panos wants us to take a look at BX. Blackstone. Okay.
Yes.
Well,
These fuckers
yeah, go ahead.
Tremendous amount of real estate, by the way, just for those that
Yep.
don't know. If you're wondering why real estate prices are so frothy, rents are so high, these these fuckers own a decent chunk. So yeah, something to consider before I do a little bit of an analysis on it. So again, from a business standpoint, from a company standpoint, from a management standpoint, they're great. But other than that, I think you can tell my sentiment around them. But from a technical standpoint, downtrend, as Chris has highlighted beautifully with the downtrending line at the highs there. Now, am I going out and buying this? Am I a fan of the company? No. But I do feel like take a look at the support, 90 support. I would, if it gets there, and it will get there if the market continues to pull back, I would then wait and see if it can hold that support. I would not buy now. I would add like an alert on TradingView or whatever you want to use at 90, right? To go off if it gets there. Right now, I'm not a buyer at these levels. We know that there's things that are downtrend. We also know, I believe, if I'm not mistaken, they're stopping purchasing of new homes in new properties across multiple states. Okay, I don't know the specifics, but I do know that they have kind of halted home purchases across multiple states. For whatever reason, maybe they too see like a downtrend in home prices, which is what I think it is. And I've been calling for that myself. I've been publicly saying, whether it's Canada or US, maybe even Europe, that we've seen a pullback in prices since I first mentioned it. Canada had the steepest decline in housing in over 20 years. US, not as steep, but a bit. I personally have physical real estate. I have no debt, so I don't really, worry too much. But I have not been buying any real estate over the last three years. Simply not because of lack of capital, but simply because I didn't feel like there was much margin of safety. There's not much margin there. Personally, did it go up further? Yeah, but I wasn't going to go and chase that. Right? I can better utilize money. Put it in markets because that's my main proficiency, and it's a lot more liquid.
No, it's a great thing. A great way to put it. What I'm trying to say, there's always the ethical aspect of taking a position. That's for sure. Okay, so Ricardo wants to know about snow puts. SNOW. Okay. Looks like earnings were pretty good. I wouldn't take a short on this, personally, which is basically what a put is. Riz, what are your thoughts?
Yeah, so here's the thing. I had a put option that I closed for a loss, full transparency, and I mentioned it. I mentioned it the moment I took the trade. I bought puts after earnings, well, actually on the day, like after earnings, when it moved up like 20%, 22%. And then what I did was, it was a contrarian play, right? Nothing big, just a speculative put from hoping for a pullback, especially after it got overbought. Now what happened was, even on Friday, it did pull back from the gap up, but it still ended up green. and then I'm like, I'm not carrying this through the weekend and getting DK'd on there. So I closed the put for a loss, but I do see a potential setup for a short here if markets continue. I think this can pull back. I think it's way overbought. You can see that with the RSI. Earnings were good, but this thing is like it's overvalued. Yeah, it's a tech company, but man, it's like frothy as hell. And I know some people will be like, maybe Warren Buffett. I know he took a position. I don't know if he still has it, but that's not the end all be all. Like, I don't wanna like blindly follow Warren Buffett, um, or anyone on and not to mention the filings are like a few months delayed. Um, like Warren Buffett's been piling into Chevron or something like that. Doesn't mean I want to go and just you know keep buying Chevron. Uh, so yeah, for those people that say Warren Buffett holds it, well, it's frankly irrelevant at this point. I do see that it could go lower, but you got to be careful with this. You don't want to short this directly or buy a put and then just hold on for dear life. You need to have a plan for these kinds of setups, these mean reversion plays where you're anticipating it goes back, uh, in the range of where it was to the moving averages. You need to have some kind of area where you'll stop, uh, where you will say, you know what, okay, I think this trade is not working, and then get out. I did that on Friday, um, for not just technical reasons, but also because of options, the way they decay. If I was holding a short outright, I probably would have carried it because I wouldn't have to worry about data and expiry.
And that's a really good point. Whenever you go into a trade, you need to have a plan, and I think that's something that we try and give you guys here in Elite is to give you some direction as to what our plan is, what we're looking at, why we make the decisions that we do, to try and help you learn how to do it on your own, so that when you decide to go ahead and make your own trades, you have a plan already in place. Okay, if this is my plan. If it starts moving this direction, we're gonna, take profits here. Or if it starts moving against me, do I feel confident in this? Is this a solid company? Do I mind holding this longer term? Or is this just kind of a contrarian play? And if it doesn't work, oh well, we just need to kind of cut it loose and, let it go. And I think that's a very important distinction to make when you're trading, because sometimes a lot of people think that we just go, oh, we're going to take this stock long because of this, and then hope for the best. It's really not like that. We do have a plan going into all of these setups, and it's why we don't just take willy-nilly trades left and right, because we don't want to give you that concept that that's a good thing to do, because it's not. You want to be very focused on what you take and have a plan going in, both to get in and to get out.
Great. I agree with Chris on all aspects. I will also add one more thing. We also don't just do call outs. Many of these fucking people in their own chat rooms or whatever, they're just fucking doing call outs. They're either paper trading or don't trade themselves. So it's easy to call. You're gonna do like I could do 10 call outs a fucking day based on what I'm seeing, but I don't do that because I put my own money on the line. And it's not, you know, me just buy this above this or short this below that, and that's what people do. They just say, and you'll see like 10 different trains. You're wondering like, what the fuck? Like, what positions does this guy even have open?
Yep.
The actual answer is none, because they're just doing call outs. They're just doing call outs. It's so easy when you don't have anything on the line, when you assume technically you have no, you know, capital limitations. Everyone has capital limitations. Whether you have a $10,000 account or a $10 million account. They have no skin in the game. They have no risk. Why the fuck not? Why the fuck not send 10 trades, 5 trades a day? Because this is how they do it. And I've been long saying that what people see online, what people see in all these people's posts it's not real. It's not how it works. So if they gauge or if they measure trading and trading success based on that, their whole mindset and ideology of what trading is, what it looks like, will be warped. It's like expecting your girlfriend or your wife to only look like a Victoria's Secret model because you think all women are looking like that, or they all have to look like that. That's the only time you're gonna get married, or that's the only time they'll be your girlfriend. That's not real. Some people maybe, but that's not real. That's not the reality. It's a tiny, 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 tiny isolated percentage. So when you see someone making hundreds of percent and all just winners and winners and all just, oh, look, we've set 10 plays today and 10 worked out. Well, that's not reality. It's very, very important to be extremely uh, careful in this social media environment. And it doesn't matter. It's not just in trading. This applies to advice on, um, fitness. It applies to personal finance. It applies, of course, to trading and investing, but it applies to, consulting on businesses. I've done some business consulting, and you'd be surprised at some of the shit people say, and I've heard, and I'm like, oh my god, that's complete bogus. We gotta, and then the work is harder because now I have to help them undo the bad stuff. It's double the work. Like if someone comes to me in Elite or takes the master class after they've taken some other shady, sketchy, fuckboy trader out there, well, now I have to undo the negative, the stupidity, the bad trading habits, and then we have to teach them the right stuff. So it's. I always tell people what you partake in, the information you digest, it has a cost. It has a cost. So, be very, very careful. Be very, very, um, you know, it's important to do your due diligence. Whether it's on a stock, do a due diligence on people, on your mentors, on people you're listening to. Whether it could be someone you follow or subscribe to, right? So. I have said that before, but I thought it bears a good reminder, especially after what Chris said on having a plan. And we want to be measurable on our trades. We want to be strategic on our trades. Could I trade more apps? So fucking absolutely. Does it mean we'll make more money? No, not necessarily.
100%. All right, Panos has a question. This applies to a couple of your teachings, so I won't talk about it directly, but he's talking about, different strategies for trading, and, he mentions the fact that the market trend can change like 10 times per week, it feels like, and that's super annoying. I have to agree with you. It definitely is. But, like what strategies are you looking at, Riz, this week? What are your plans as far as things that you're looking at?
Great, great. So for me, if I had to pick a direction, like I've been saying for the last 2, 3 weeks and more, maybe last month, I've been telling people in Elite. But the last time I was on webinar was 2 weeks ago, and I said, yeah, I'm pretty bearish on this rally. I'm selling into it. I'm selling into this rally. I'm taking profits. I'm not, getting scared or shaken out of solid companies, but I am taking profits on ones that I'm green on. And that was stuff like Amazon. That was stuff like Google. I don't have position in Google or Amazon anymore after the run up. So that's just a couple of examples. Uh, and then what I've been doing is I've been, short-term trading futures or taking short bets on the market to get out, or not to get out, but to take some gains in the short term on the volatility, right? And we could see it was a bit volatile, like what we saw last week, not this past week, but the week before. We saw the market rolling over. Then what happened? Then I think it was Monday or Tuesday it rallied, right? So like people were thinking, oh, okay, that's a big pickup. We're gonna maybe see 4,300 again, but no, Friday completely threw that out the window after Jackson Hole. So this is where I say we need to establish a clear base. Right now, 44,000 could be next. I remains to be on Monday. See how Monday is. Monday is usually like my day where I get a feeler. Like I mean, I'm married, but if I was in a relationship with someone or I was dating someone, I'd be like, and not to say I was, going around dating everyone, but I'm just giving an example from a relationship standpoint. The first day you want to see, I'm not gonna, be like, okay, this person is no good. This person is no good just based on their profile picture, or this person is a horrible person just because of a brief description in their, in their whatever profile or whatever, wherever you met them. But once I go out with someone, once I see someone, once I meet someone, I'm gauging how they are. I want to see a feeler. So Monday is that kind of day. Monday is that day where I actually don't trade too much on Mondays. I've noticed when I've looked at my historical trading activity, I don't trade too much on Monday. Why? Not because I'm doing fuck all on Monday. It's because Monday is the day that gives me a bit of an idea how the rest of the week could go. Right. So I was thinking on Monday, well, this is crazy. The market's buying up this rally. Um, uh, this pullback. And then Friday came along when I was still indecisive. So I You'll notice I didn't really buy anything besides, Sanofi, that was, pretty much uh, a bit of a oversold long in a small amount. So 4,000 is next level. A break below, look out below, because we can see 3,900. We can see lower. I'm actually going to do, the a few months ago I did a whole tiered buy list. I did an entire levels kind of area for elite members only, where they get to see the kind of tranches, the areas that I feel like they should buy at and scale in. I will do that again with updated levels current uh, based on current price action, based on current situation. Okay, and I'll update that if it needs to, along with providing members with specific companies to buy at certain price zones. With that, right? So I'll be working on that. I'll be doing that. I'll be releasing that to elite members sometime this week. So for those of you in elite, you can be on the lookout for that. I'll let you know when it's out. For those not in elite, well, tough luck.
You had your chance. I mean, we announced that we were reopening membership, and of course, welcome to all of our new members. I should have done this earlier, and I know Riz did, but we're so glad that you've joined us. Hope that you stick around and continue to be part of Elite to get this knowledge that you're not going to get anywhere else. And of course, if you've made it this far in the video and you're watching us on YouTube, make sure you click that like and subscribe button. Help us grow the channel. Riz, thank you so much for coming out. It was great having you on the webinar as always, and we look forward to seeing how the market behaves this week.
Absolutely. Ciao.
All right, thanks everybody, and as always, we will see you in the market on Monday. Good night, everybody.